We couldn't agree more. It is an indeed a very weird market. Things that you historically could rely on, you can no longer rely on. I mean, whoever would have thought that the kind of volatility we're seeing in developed market currencies versus the emerging market currencies are doing relatively okay. And that kind of feeds into the whole theme around gold as well. Danny, we've heard three big arguments as to why we're seeing the volatility in gold, or why gold has actually been the best performing asset class year to date. I mean, it's related to investors trying to hedge their dollar exposure. It's related to collateral for digital assets and cryptocurrencies. There's a number of different reasons. And also because there's an increasing retail participation in the market, and gold might be seen as one of those meme areas for retails to participate in. We don't really know. But what we do know is if you look back 30, 40 years, gold has same kind of returns as equities, but twice the volatility. And that's what we're seeing come true today as well. And, what we would expect going forward as well.
That volatility is real. And maybe that is a historical correlation that's holding up because it's an equity market that, yes, you've had some wobbles around trade, but for the most part, it has this melt up quality to it that it just feels inching towards new highs or slightly above them. Nimrit, are you surprised that equity market volatility has been relatively calm, that some of the issues in the gold market, for example, this morning aren't seeping over to wider sentiment shifts?
Danny, actually, one of the data I saw just yesterday on Bloomberg said that equity market volatility is actually at its highest level outside of recession years. So we are seeing the volatility. I think when we think about volatility, we think up and down. The problem is we've only seen volatility going up, right? A lot of upward movement. But I think what is surprising is the kind of euphoria we're seeing in the market. In some ways, it makes sense because you're saying, okay, you've had this huge boom from AI contribution coming through, and now it's going to trickle down to the other sectors of the economy. I mean, you look at GDP estimates for Q3, 3.9%, inflation 3%. And this is an environment that we're looking to cut interest rates. So talk about adding fuel to the fire here. And we've got deregulation. All those things are bringing out what we would call animal spirits.